94.3.
This is Good Morning Mumbai with Rishi K.
Welcome to Swatantra. It's an investor education initiative by UTI Mutual Fund, powered by 94.3 Radio 1. Week after week, some of the finest minds in independent financial advice and wealth creation coming here and share the wealth of their expertise. Pleased to welcome this entire week Ankita Tanna Narsi. She's founder and mentor at Oak Tree Financial Advisors. It's an investment advisory firm intending to make investing simpler, more understandable and profitable for investors. Hi, nice to see you. How are you?
Hi Rishi, good morning. It's nice to see you too.
The theme for this entire week, Ankita, is what we're calling a youth special. Now, we all know that a person's youth is the most important period in one's life, and this is the time when you can explore things, take risks, build a future. Now, these things apply, I imagine, to finance as well. Let's start with discussing the common money mistakes that youth make.
So Rishi, like you correctly said, youth is the most important time of your life to explore new things, take risks, make a comfortable future for yourself. However, a very disappointing fact is that the younger generation is very averse to financial planning. They have a lot of misconceptions about the same. They always think it's too early for me to start. Like, I've just started earning my salary. It's, let me spend some, let me buy gifts for myself, my family, my friends. So let me just enjoy the money that I've just started earning. They also think that investment is a complex subject. So they don't take too much interest because it involves numbers. So when it comes to numbers, a lot of people get freaked out. They always feel it's too complex. I will think about it later when the time comes. They also feel that they do not have enough money to start savings or start investing, but the fact is that you actually need to start small in order to grow big. You don't need a huge sum of money to start investing. You can start investing with rupees 500 a month and you're good to go for your future. The youth also generally doesn't understand the difference between their salary and the disposable income. They are always, they are very frugal in their spending. They splurge on outings, they splurge on gadgets, they splurge on dining out, shopping. So they really fail to understand that there are certain unavoidable expenses like your rent, your EMIs, your utility bills, your taxes. So they don't really understand the difference between the salary and their disposable income.
More conversation with Ankita up ahead. Don't go anywhere. Music and back.
94.3.
This is Good Morning Mumbai with Rishi K.
Swatantra continues. It's an investor education initiative by UTI Mutual Fund, powered by 94.3 Radio 1. For those of you tuned in late, our theme for the week is a special on youth, their spending habits and how they can grow their income. And our expert for the week is from Oak Tree Financial Advisors. That's Ankita Tanna Narsi, founder and mentor. She's been working in this field for over half a decade. A final question for the day, Ankita. How can mutual funds help young people with their investments?
Mutual funds are the best products for your long-term wealth creation. They are professionally managed by fund managers who are expert in their field, and they have a big team working under them. So they are constantly updated about the markets. They're basically professionally managed, so you don't really need to know the nitty-gritties of how the stock market is working. Mutual funds are affordable. You can start investing with as low as rupees 500 a month and still achieve your goals, which is not too difficult. It's just like avoiding one cup of coffee in a cafe. It's very much doable. Mutual funds also instill the habit of discipline amongst the youth because you have a systematic investment plan running every month, so you know that you cannot skip that. So it teaches discipline to young investors. Mutual funds also offer a lot of products that meet a lot of requirements of the youth. They have diversified products. They have multiple products across equity, debt, so it can fit in any of your goal that you would want to achieve, long-term or short-term.
All these conversations are available by means of a podcast at the end of the week on www.utiswatantra.com. That's utiswatantra.com. Please revisit it. Tell your friends and family about it. Ankita, thank you for your time. I look forward to seeing you tomorrow.
Thanks, Rishi. See you tomorrow.
UTI Mutual Fund presents UTI Swatantra Series Season 2, powered by 94.3 Radio 1.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
94.3.
This is Good Morning Mumbai with Rishi K.
Tuesday edition of Swatantra, an Invest Education Initiative by UTI Mutual Fund, powered by 94.3 Radio 1. Our theme for the entire week is a youth, young people special, and our expert for the entire week is from Oak Tree Financial Advisors. She is Ankita Tanna Narsi. Her main focus is helping clients understand their financial objectives and make appropriate plans to realize them. Ankita, welcome back onto the show. How are you doing?
Hi, good morning. I'm doing good. Thank you.
Today's first question is, what is the right time to start investing in mutual funds?
Ideally, one should start investing with their first paycheck, but in majority of the cases, that's not how it works. So don't panic, you haven't missed the bus. It's always the right time to start investing through systematic investment plan. The earlier you start, the more time you give your money to work for itself. You know about power of compounding. It's the eighth wonder of the world. So it basically works magic for your money. It makes your money work for you. So the earlier you start, the more time you give your money to grow. And the best way to invest in mutual funds is through systematic investment plan. It helps you beat volatility. You can just assign one SIP for each of your goals, and you will be amazed to see how a small amount can actually help you reach your bigger targets in the future very comfortably.
More conversation with Ankita up ahead. Don't go anywhere. It's music and back.
94.3. This is Good Morning Mumbai with Rishi K.
Swatantra continues. It's an Invest Education Initiative by UTI Mutual Fund, powered by 94.3 Radio 1. Our expert for the week, Ankita Tanna Narsi, founder and mentor at Oak Tree, just a couple of minutes ago was telling us about what the right time perhaps could be or not be to start investing in mutual funds. She is somebody who enjoys addressing the youth about mutual funds in a simple kind of lingo that most of them connect with. Final question for the day: what type of mutual fund is ideal for this category, for the youth?
See, when you're young, you have more risk-taking abilities because you have limited financial obligations on you. So make the most of this time and work hard for your future. You will definitely have a comfortable future if you start early, like I mentioned previously. So I would suggest you, for your long-term financial goals, for your long-term dreams, do focus on equity funds. They will definitely give you better returns over a long period of time. There are also ELSS schemes which will help you for your tax savings. And then you have your hybrid funds, which are perfect for your medium-term goals. And do not forget your liquid funds, which work the best for your short-term and liquidity management.
All these conversations are available by means of a podcast at the end of the week on www.utiswatantra.com. That's utiswatantra.com. Please revisit it. Tell your friends and family about it. Ankita, thank you for your time. I look forward to seeing you tomorrow. Bye-bye.
Thank you. See you tomorrow.
UTI Mutual Fund presents UTI Swatantra Series Season 2, powered by 94.3 Radio 1.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
94.3. This is Good Morning Mumbai with Rishi K.
Welcome to the Wednesday edition of Swatantra, an Invest Education Initiative by UTI Mutual Fund, powered by 94.3 Radio 1. Week after week, some of the finest minds in wealth creation come in here and share the wealth of their expertise. And Ankita Tanna Narsi is one of those minds. She's founder and mentor at Oak Tree, and they're committed to providing professional financial advice to their clients with a quote-unquote client-first philosophy. Ankita, welcome back onto the show. How are you doing?
Hi, I'm doing good. Thanks.
Okay, we continue with our youth special, advice to young people. Yesterday you talked about which kind of mutual funds are ideal for the youth. Let's move forward and ask you about the advantages of investing in an ELSS.
ELSS, as the name suggests, is Equity Linked Savings Scheme. So these are basically a tax saving instruments which are equity oriented. The biggest advantage here is that this is the only tax saving instrument which will let you save up to 1.5 lakhs per annum under Section 80C and has an equity orientation towards, like, it invests majority of the sum into equity stocks in the market, and it has a very short lock-in period compared to the other tax saving instruments. For ELSS, you just need to lock in your capital for 3 years, but for your other traditional tax saving instruments like your national saving certificates is for 5 years and your PPF is for 15 years. Because this fund has an exposure to equity, it helps you generate better returns and beat the inflation which the other products do not offer you.
More conversation with Ankita right after this. Some tunes and back.
94.3. This is Good Morning Mumbai with Rishi K.
The The Wednesday edition of Swatantra continues. It's an investor education initiative by UTI Mutual Fund, powered by 94.3 Radio 1. The theme, a youth special that we're running through the week. A couple of minutes ago, for those of you who tuned in late, Ankita Narsi, our founder and mentor at Oak Tree Financial Advisors, our independent financial advisor expert for the entire week, was talking about the advantages of investing in an ELSS. Now, we all know that the younger you are, the greedier you are. So, how can one become a crorepati by investing in an ELSS?
ELSS, as I mentioned previously, is an equity-linked fund. So equities have a potential of giving you good returns over a long term of investment, provided you give it enough time to grow. Wealth creation, again, remember, is a gradual process. It's not a one-time thing that, you invested and you became a crorepati. It's a gradual long-term process for which you need to give in time, patience, and the more you give in time, the better it will be to achieve your required goal. I would like to give you a very simple example, and you will be amazed to know this, that by investing just rupees 5,000 per month in an equity scheme, you would generate a corpus of 1 crore in a little about 20 years. Okay, so assume you're earning returns of about 12%. You would achieve your corpus of 1 crore in about 25 years. So that's a long term, yes, I agree, but the amount that you're investing every month is just 5,000. So do your calculations and see how comfortable you are shelling out 5,000 a month in order to get a crore over a period of 25 years. The earlier you want to achieve your goal, I would suggest you to increase your SIP amount by 10% every year. Say, for example, you're investing 5,000 a month for this particular year. In the next year, start increasing your SIP amount by 10%. So that would make it to 5,500 and so on and so forth. So the more you invest, of course, the faster you will achieve your goals. But yes, don't forget to monitor your investment, keep the market conditions in mind, and be watchful.
All these conversations are available by means of a podcast at the end of the week on www.utiswatantra.com. That's utiswatantra.com. Please revisit it. Tell your friends and family about it. I look forward to catching up with you tomorrow, and hope you have a safe drive back home or to work, wherever you're going. Thank you, Ankita. Cheers.
Thanks, Rishi. Have a nice day.
UTI Mutual Fund presents UTI Swatantra Series Season 2, powered by 94.3 Radio 1.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
94.3. This is Good Morning Mumbai with Rishi K.
Thrilling Thursday edition of Swatantra, an investor education initiative by UTI Mutual Fund, powered by 94.3 Radio 1. And Ankita Narsi returns. She's founder and mentor at Oak Tree Financial Advisors, an investment advisory firm. And really, her master's degree in finance, coupled with her work experience with a very renowned hedge fund as administrator and mutual funds, has really set her up for a career in financial advice, which we are making use of right now. Good morning, Ankita. How are you?
Good. I'm good. Thanks.
Today's first question revolves around hybrid funds. What are hybrid funds, and what are the benefits of investing in hybrid funds?
Hybrid funds are basically a perfect blend of debt and equity. Debt includes fixed financial instruments. You basically get advantage of both the worlds, equity plus debt. Okay, since this has a debt component which is significant compared to any other equity fund, they are less aggressive. You could call them moderate risk funds. So if you have any medium-term goals that you want to achieve in, say, a period of 3 to 5 years, you can definitely use these funds to your advantage. Say, for example, you want to go for a vacation, you want to buy a car. So these funds will definitely help you achieve your goals in a period of 3 to 5 years.
More conversation with Ankita right after this tune. Don't go anywhere.
94.3. This is Good Morning Mumbai with Rishi K.
Swatantra continues. It's an investor education initiative by UTI Mutual Fund, powered by 94.3 Radio 1. Week after week, the finest minds in independent financial advice come in here and share the wealth of their expertise, and we're lucky to have Ankita Narsi, who's been coming in diligently from Monday on the theme Youth Special and how the youth can look at investment opportunities. Founder and mentor at Oak Tree. A couple of minutes ago, she was talking about hybrid funds and the benefits of investing in them. Final question for the day, Ankita. What investment advice would you like to give to young people?
First and foremost, start investing early, be disciplined with your investments, and be regular with it. Prioritize your needs and goals. Don't get confused with your wants being your needs. There is a difference. Understand that. Set your goals accordingly. Invest in equity-oriented funds for long-term goals. Diversify your investments. Don't put all your eggs in one basket. Do consider SIP as your basic investment instrument, just like you pay your mobile bills, your Netflix subscription. SIP should be a part and necessity of your savings and investment. If you have any confusion, if you're not sure of how to go about it, don't feel reluctant to seek advice of a financial advisor. They are experts in this field, so they will definitely help you with it.
All these conversations are available by means of a podcast at the end of the week on www.utiswatantra.com. That's utiswatantra.com. Please revisit it. Tell your friends and family about it. Ankita, I look forward to catching up with you one last time this week tomorrow. Take care.
Sure, thanks.
UTI Mutual Fund presents UTI Swatantra Series Season 2, powered by 94.3 Radio 1.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
94.3. This is Good Morning Mumbai with Rishi K.
The award-winning Swatantra Investor Education Initiative by UTI Mutual Fund, powered by 94.3 Radio 1, returns. And for this Friday edition, we're lucky to have back Ankita Narsi, founder and mentor at Oak Tree Financial Advisors. Oak Tree enjoys focusing on investor awareness programs, also for the not-so-privileged lower-income groups, to explain to them the basics of investing, and their main focus is helping clients understand their financial objectives and make appropriate plans to realize them. Hi Ankita, how are you?
Hi, good morning.
Today let's talk about a millennial quotient. What is a millennial quotient and how are mutual funds compatible?
Well, you're a millennial if you've reached young adulthood in the early 21st century. Millennials are more receptive to newer ideas. They want more options to choose from for making a particular decision. They believe in transparency of processes and they're more tech savvy. They will definitely trust an expert for his or her views. Millennials also value clarity and conversations. Mutual funds are definitely reaching out to millennials with efforts like UTI Swatantra. In my opinion, millennials and mutual funds are very compatible. Mutual funds are managed by experts. They are very transparent in their operations and they are the best wealth creation instruments in the long run. Did you know, as per the Morgan Stanley research on Aspiration Index 2018, wealth is the top goal of 80% of the millennials. Millennials are also more open to buying financial assets than the previous generations who only focused on buying physical assets like gold and real estate.
That's interesting. Up ahead, we're going to round up this discussion, but first some music and back.
94.3. This is Good Morning Mumbai with Rishi K.
A very eventful week in studio with Ankita Narsi, founder and mentor at Oak Tree Financial Advisors, on our youth special. A couple of minutes ago, for those of you tuned in late, she was talking about the millennial quotient and how mutual funds are compatible to that millennial quotient. Last question for the day as well as the entire week, Ankita. Can you give some tips, pro tips, professional tips to millennials to deal with market volatility?
Systematic investment plan is your best friend when it comes to beating market volatility. Do not stop your SIP in volatile markets. Ignore the noise, be disciplined and do not panic. Diversify your investments. Invest across all market caps, be it large cap, small cap, mid cap. Don't be focused on a particular market cap. The more you're diversified, the lesser the impact of volatility will be on your portfolio. Again, last but not the least, seek help of a financial advisor if there is any confusion.
All these conversations are available by means of a podcast at the end of today on www.utiswatantra.com. That's utiswatantra.com. Revisit it, tell your friends and family about it. Thank you, Ankita, for your time and your diligence in coming in through the week, and hope to see you soon. Cheers.
Thank you so much, Rishi.
UTI Mutual Fund presents UTI Swatantra Series Season 2, powered by 94.3 Radio 1.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.